The Canadian Securities Exchange presents your go-to source for trends in junior and small cap markets. Each month, join host Anna Serin and financial expert Bruce Campbell in partnership with Stockhouse.
Welcome to the July 2026 edition of The Market This Month. I'm Anna Serin, Director of Listings Development with the Canadian Securities Exchange, and today we'll explore one of the key themes shaping markets this summer, sector rotation. As we move into the second half of the year, investors continue to navigate resilient markets, shifting sector leadership and ongoing economic uncertainty. While July is often a quieter period for trading, seasonal trends have historically pointed to improving market strength as we move toward the fall. One of the biggest stories has been the rotation taking place beneath the surface. After a strong run earlier this year, precious metals have pulled back and now appear technically oversold, while technology has become increasingly extended following a strong second quarter. Healthcare has also begun to recover after spending much of the year out of favor, highlighting how quickly leadership can shift as market conditions evolve. Investors are also asking whether we're seeing the beginning of a broader rotation from growth toward value investing, or simply a healthy pause within the current market cycle. It has also been a notable month for North American capital markets. The Texas Stock Exchange, the TXSE, officially commenced trading, marking the first significant new national U.S. stock exchange to launch in decades. Headquartered in Dallas and backed by major financial institutions, the exchange is beginning with a phased rollout before expanding to exchange-traded product and future corporate listings. Its launch represents an important development in the competitive exchange landscape and provides issuers with another potential avenue to access public capital. It will be interesting to see how this increased competition influences capital formation and listing strategies across North America. Here at the Canadian Securities Exchange, we were pleased to welcome three new issuers this month: Bighorn Metals Corp., Orium Exploration Inc., and LC Nutrition Holdings Inc. LC Nutrition returns to the Canadian public markets as an innovative plant-based nutrition company, while Bighorn Metals and Orium Exploration further strengthen the exchange's growing resource sector and diverse issuer base. Corporate activity also remained healthy across our marketplace. Vireo Growth announced its planned acquisition of Fluent Corp in an all-stock transaction, while Fluent also announced the sale of its Texas operations for US $30 million as it continues to streamline its business. Redwood AI filed a preliminary base shelf prospectus providing financing flexibility of up to $25 million. Meanwhile, First Phosphate completed an oversubscribed $15.4 million financing, and the Fleur Minerals successfully closed more than $11 million through its bought deal, public offering, and concurrent private placement. These transactions demonstrate that despite shifting market leadership, quality companies continue to access capital and execute strategic initiatives that position them for future growth. Today, we'll discuss whether seasonal market weakness creates buying opportunities, how sector rotation may influence portfolio positioning, and whether we're seeing the start of a broader shift from growth to value investing. We'll also look at the outlook for metals, technology, and healthcare, and discuss what the launch of the Texas Stock Exchange could mean for capital formation and competition within the U.S. markets. To help us break it all down, I'm joined once again by my co-host, Bruce Campbell, Portfolio Manager at StoneCastle Investment Management. Bruce, welcome back to The Market This Month. All right, so Bruce, thank you so much for joining me here in Vancouver. We are doing the July 2026 episode of The Market This Month, and you've made your way into sunny Vancouver. Thank you for joining us.
Yeah, live and in person.
Live and in person. Now, listen, we redid The Market this month. We've rebuilt it this year, so we're about halfway through our first year of rebuilding it. We've had some really great success, and we have a lot of viewership, which is really exciting for us.
Yeah, some solid feedback too,
That's right.
People are liking the new format.
That's right. Well, listen, it's really exciting. Thank you for all of those that tune in, and we're always happy to hear from you. If there's certain things that you want to hear from Bruce and learn about, then please let us know. Okay, let's dive right into July. So July is often a bit of a weaker month, as we move into the summer months. But now what we're being affected by is seasonality. So talk to us about that and what you're seeing.
Yeah, seasonality is one of those interesting things. We think about it as the climate and not the weather, because every year there's different things that are happening economically, politically, that drive the markets, but we still need to be aware because the long-term seasonality has an impact. And we know that typically that's a little bit weaker in the summer. And it goes back to the history when we think about people being away from their office and not having access to their office. And so they're, they would maybe sell, or they would just, park some cash, or they would just sit back. And now we have a little bit more access to markets, if we're at the cottage or the lake or wherever.
That's right. We have Wi-Fi in remote locations.
Exactly, right? But we still tend to see this seasonality follow through. And so we tend to see a little bit of weakness July-ish, August-ish, and September.
Yeah.
And then we tend to see strong fourth quarters. And so that we look at that and say that presents an opportunity, especially if you're a longer term investor, because then, things can get sort of pushed around, especially if it's on the smaller cap side, a little bit less volatility sometimes, or a little volume sometimes. And that can push stocks to extremes. And so you can take advantage of that.
Do you think that the mentality is, I'm going to move my portfolio into something a little bit more, with a little bit more stability to it, so I don't have to watch it as closely? Do you think in the summer months, I don't want to watch as closely, so there's a bit of a shift? Is that?
I think that was historically the way that it was, for sure. I don't necessarily know if that's still the same way today because of that access, and people are always trying to gain return.
That's right.
But they're also not probably putting in the amount of work that they typically would during the rest of the year.
Now, I've heard some interesting diagnosis of today's investor, and this is referring maybe to today's perhaps younger investor in Canada in the retail market. So I'm not trying to speak to, kind of a more broader view, but that there is this mentality around investors are not as longer term investors as they used to be, that because they have instant access on their phone, they've borderline become day traders. Is that something you've noticed? Is that a reality?
I certainly think that's the case.
Okay.
If you go back in history, people used to get their monthly statements. They would arrive in the mail and they could see, oh, here's what my portfolio looks like.
Right.
And if they tracked it, maybe they were tracking it, but they weren't looking at their phone.
Yeah.
And now you can look at it as many times as you want a day, and you can see tick by tick what's happening. And we know that investing is emotional, and we know that humans are emotional.
Yes.
And so that's going to have an impact, either fear or the fear of missing out.
Yeah.
And that can drive investment markets both ways.
Yeah. I mean, that's tough on, I think, especially the growth companies. I think that's tough. They prefer to have a longer term investor than a shorter term. But anyway, it's good to, that there are people accessing the market, however long, and maybe that'll change. Okay, here's a question for you.
Yeah.
Do you think seasonality is reversed in Australia?
Oh, I've never thought about that, but
okay, I'm going to ask my Australian friends.
Yeah.
So they might have this type of sell and may go away
in the winter.
In our winter, their summer. Okay, I'm going to ask them. We're seeing a significant rotation enter the markets across all the sectors. So what rotation are you seeing, and where is this creating opportunity?
Throughout the year, we've seen a bunch of rotation.
Okay, more than normal.
Well, I don't know if you can say normal anymore because things are changing so much, right?
Okay.
But certainly a lot of volatility. If you think about the beginning of the year, last year, and the beginning of this year, on market this month, we talked about precious metals and gold and mining stocks, and they had an amazing first quarter, and then the second quarter they kind of rolled over.
Yeah.
And they pulled back. And then you think about energy. Well, energy a year ago, we weren't talking about energy really at all because it was just kind of like this flatline commodity.
Yeah.
And then we have a war that breaks out and commodity prices spike way up.
Right.
Technology has been, all the rage forever. But now in the last few weeks, there's been some talk about, is the spending going to continue? And, are some of these technology stocks getting overvalued? And so now all of a sudden you've seen rotation out of technology. And then anytime there's instability in the markets, where do people look? Well, they tend to look at financials. They tend to look at healthcare, and those two sectors are starting to come alive.
Yeah, absolutely. It's kind of that safe haven that they go to. I think we touched on this last month. We talked about SpaceX last month, didn't we?
We did, yeah.
Okay, so what's happened since we spoke last month in SpaceX?
Well, I mean, it didn't disappoint, right? That's for sure. So massive, came out, was, I think at the peak, it hit, the fourth or fifth biggest company. I think it's dropped back a few now, but it's still, massive company.
Yeah.
And, there was a lot of expectation that out of the gate it would do really well, and it did. It was $135 listing, and it ran up into the 200s, and is now pulled back actually quite close to the listing. And who knows if it'll go below or stay above it.
I mean, I think the one thing we forget as we watch these big mega movements is that, for it to go back to what it opened at, what the IPO was done at, there was a lot of people that made money and a lot of people that lost money in those swings. Those are big swings, right?
Yeah.
Like
massive swings.
in the trillions.
Yep.
Yeah. Big swings of capital coming and going into the market, people making and losing money within that. So, well, that'll be interesting to continue to watch. On that note, what we haven't talked about and just touch on in the U.S. is that the Texas Stock Exchange opened its doors just this month. So I know that that's not as much your wheelhouse, but I am curious to see how that's going to play out as far as capital formation and access to capital within the U.S. Traditionally, there's been the two traditional stock exchanges, the big guys down there, and then there's the OTC markets, which isn't actually an exchange, but a trading platform, an opportunity for people to trade. And so there's this new place for capital formation. I mean, do you think that this is going to continue to help develop further capital formation in the U.S. and North America?
It would be an interesting trend, right? Because for probably 50 years now, we've seen stock exchanges consolidating.
That's right.
And now it'll be interesting if it's actually changing. That trend's going to go the other way just because of, increased competition. And that's usually what happens in a market.
Yeah.
But it's expensive, and there's a lot of regulatory burden to get into that.
Yeah.
And so, maybe this is the start of that, a new trend.
I got to say, I'm a big fan. It's not in New York. I'm a big fan that it's in Texas. Yeah. There's some stuff I'm intrigued about. It'll be interesting to watch. And I think a competitive landscape, is good for everyone and creates opportunity. And I think what they're offering is different than what the traditional other exchanges are offering, which is, come and be a challenger, like the CSC came into the Canadian markets as one. So I hope that they do well. Okay, let's talk about precious metals. They've kind of become oversold. Technology and healthcare, you kind of touched on that. What are you seeing going into the fall? Is there any...
Yeah, well, the big thing is, as I mentioned, when the beginning of the year, we were talking about precious metals, and I mean, that was all the rage.
That's all we talked about.
And it got extended. Gold ran up, silver ran up. They got super extended. Yeah. And now it's gone the other way. And there's, multiple different charts from different people going out showing how oversold, the precious metals sector is right now. So it went from being the absolute darling to just being completely left behind.
Yeah.
And it's often in those extremes where the opportunities are, right?
Absolutely.
In that, when it gets too far ahead, maybe that's the time to sell. And when it gets too oversold, that's maybe the time to be accumulating. And so it'll be interesting to see what happens here, because it certainly is, that sector's really been blown out.
Well, and let's not forget, a lot of the miners, a lot of the explorers and a lot of the miners are currently on property right now. And there's a lot of data that will be released in the fall. So if it's a little oversold and potentially good data could come out in the fall, you can position yourself quite well.
Yeah, it'll be catalysts, both from the exploration side, but also from the operating companies as well. Their cash flows are still going to be really strong, even with the pullback that we've seen in gold. And so those numbers will be interesting as well.
Well, I hope that's the case. Anything that we should think about going into August? I mean, August seems traditionally even sleepier than July traditionally. So what are your thoughts?
Well, I mean, one of the things that we have had our eye on is that right now there's this expectation, especially when the new Fed chair came in, that he was going to potentially start increasing interest rates, which was not the norm and not what was expected.
Yeah.
But if you kind of look at what's happened with Fed fund futures and how the market's pricing that, it's all been based on inflation. Yeah. And we're actually going to get probably lower inflation here for the next few months. And so what does that do to the market's expectation of rate hikes versus, maybe he'll stay where he is or potentially even drop rates if we're seeing slower inflation.
Okay. Well, we'll watch out for that. I think I'm going to let you stay in Kelowna because it's so gorgeous in August, and we'll do this remotely, but hopefully we get you back here in September. It's always such a pleasure to chat with you, Bruce. Thank you for coming out here.
Yeah, another great addition.
Yeah, sounds great. We'll talk to you soon.
Yeah.